What's going on, guys? It's Rich with Rich of Wall Street, and we got a little technical analysis video for you today. I have some people that were asking me, um, hey, how do you day trade? What's the pattern that you look for? What's the indicator that you use? And if I'm going to get right down to it, I really don't use any indicators, and I don't look at a specific pattern. All I look for is key levels of contention, or as most people call them, support and resistance lines. And then from there, I just look at price action. Okay, so I guess some people would call price action a pattern, but price action is more than just a pattern. It's a simple reading. An example of price action would be these two candlesticks right here. So you have a long green candlestick, and on this candlestick, you can see that it's pretty much just real body. There's no wicks. Well, there's no wicks at all. Okay, so when you're looking at this, you see that is strong price action. There are so many buyers, and the buyers are not letting up. There's no wicks whatsoever. Now, whenever you get to the next candlestick, you see that this next candlestick continues higher than the high of this candlestick or the close of this candlestick, right? Because what we're looking for with price action is we're looking for the buyers to just be nonstop. And so what I would be looking for when it comes to price action would be, if I see this long, strong, confident green candlestick, what I'm going to do is I'm going to wait for this next candlestick to trade above this high. Okay, so as soon as it trades above this high, that's my signal to jump in. Now, obviously, that would be like a pattern, right? It's because it's so basic, but there's a lot more things that go into it whenever I trade. I don't make my trades just based off price action. At least not to that extent. There's a lot more when it comes to price action, okay? And those key levels of contention, or your support and resistance lines, those help out a lot when it comes to that. And so today I'm going to show you guys how to draw those key levels of contention, what those key levels can ultimately predict, and what those key levels, how they help you read the chart. So right now I'm looking at AMD. This is my favorite stock. It got completely beat down yesterday. I don't even know what the news was. Hits correction territory after strong fourth quarter, so they had earnings, right? No, I don't know what it was, but they ended up dropping 10%, and it cost me a whole small portfolio challenge. So, but if we're looking at, we'll use a daily chart right here. If we're looking at key levels of contention, right? What I like to do personally, a lot of people, when they draw support and resistance lines, they do a horizontal line and they just put it wherever, right? What I like to do is I like to draw a rectangle, and I like to really go to like the level of contention. So right here, you can see that this line is going across the very base, right, of the real bodies of candlesticks. And then I can go down to the lowest wick, and I can see that I have a key level of support right down here. So again, this would be my key level of contention. When I'm looking at this key level of contention, what I'm looking at is, okay, when the stock comes to this level, it tends to bounce back up. Let me just extend this out so you can see it better. So when the stock comes to this level, it tends to find the support and bounce back up. It did it once, twice, 3 times, 4 times. You could even say 5 times if you count this one, right? So what I look for here is I look for this key level of contention. Once the stock price gets to this key level, I'm looking for lower wicks, right? Because I'm looking for it to get down to this level, which means that the stock's going to be in a downtrend, such as here. Right? We have a nice downtrend. When the stock finally gets down to this level down here, I need to see a lower wick. As I see that lower wick, I need to see a color change. So another green candlestick immediately after. So if we look at it, we have our downtrend coming down to this level of contention, or this key level of support. From this key level of support, again, the price action, we're looking for this to form a long lower wick, because that just indicates that there were so many sellers, but the sellers could not push the price down. So once we see that long lower wick, followed up by a color change in the chart, anyway, in other words, it goes from red to green. That shows that, okay, this could be a possible correction and a reversal to the upside. Now, again, what we're looking for is price action. We want to make sure that our price action, our candlesticks are solid, right? So this candlestick, it's okay, right? The entire candlestick goes from up here all the way down here. We're closing in about the top 25% of this candlestick. So if you divided this candlestick into 4 pieces, this is probably close to the top 75%. As long as we're over 50%, right? That's general price action. As long as we're over 50% on the close when it comes to green, and then below 50% when it comes to a red candlestick, such as here, then that's strong price action in that direction. Now, again, what I'm looking for is the next candlestick. It needs to trade higher than the high of this candlestick, right? So we have a candlestick here that trades higher than the high. So we would buy in immediately after it crosses this high. So what I would do is, let me get rid of this because we don't need that downtrend anymore. What I would do is I will set a support line on the daily chart going across so we know when to buy in. As soon as it crosses this point, boom, we buy our call options. Now, after buying our call options, we just let the stock ride, and then we get to where we got to go, right? So that's normally what you would do, or what I would do when it comes to price action. So if we look at it on the 5-minute chart, because when we day trade off the 5-minute interval. So when I'm looking here, right, what do I see? I see that the stock has a support level right around here. So what I'm going to do is, early in the morning when this forms, I'm going to draw it out. There we go. So market opened, and you can see that it ran up, came back down, ran back up, came back down, ran back up, came back down, and it hit the same level. So when I get to this point in the day, this is at around 8:40 in the morning, about approximately 2 hours after the market opens. When I get to this point, again, I'm looking for, all right, we're in a downtrend. Obviously, the red candlestick going down. We're back at this key level of support. And then on top of that, we need to be looking for lower wicks that are formed. So we have some lower wicks here, and we have another lower wick here that formed. Now, what we have is, again, the lower portion of our candlestick and the upper portion of our candlestick. We're closing in approximately the top above the 50% mark, right? So if we're above the 50% mark, all we're looking for now is the next candlestick to trade higher. And as soon as it passes that point, that's when we buy in. So if I'm watching this on the 5-minute chart, after this forms and this candlestick, runs down a little bit, then it starts to run up, I already have my options order ready. Let's just do this one. And then we'll go back to AMD. I accidentally switched it. All right, there we go. So I'm going to have my option order ready. And as the bid and ask are moving, in other words, what people are trying to buy the contract at and what they're trying to sell the contract at, I'm going to have my limit price slightly above it, because I know that by the time it gets to this point that we need it to cross, I want to be in and out just like that. I don't want to waste any time trying to catch the stock. And that's the most recent mistake I made on my $500 portfolio challenge was I missed my entry. I raised my entry price to try to get into the stock, and it immediately reversed when I could have been in and out with about 30-40% profit. So what I'm looking at here is I'm looking at this candlestick right here that goes down to this key level of support. I see the wick. Nice. I see another wick, but if it's followed by a color change on the close, that's even better. I'm looking at this close and I'm thinking, oh wow, that's above 50% of the entire candlestick from low to high. So all I'm waiting for now is the next candlestick to trade higher. As soon as this candlestick trades higher, I put in my call. And again, whatever the bid and ask are down here, I'm going to be above that because I want to get in without chasing the stock. As soon as you get in and you see the stock run up, you can then kind of navigate how you want to approach the next level of resistance. And so ultimately when you want to sell. So when I see this candlestick run up and I see that it's another strong green candlestick, what I'm going to look for again is the next one to trade above it, which it does. It trades above. Perfect. Let it run. This one is a good green candlestick. It's above the 50% mark of this of the entire candlestick. As soon as it trades above, perfect. It traded above. Here, I got another solid green candlestick. I'm waiting for it to trade above. It didn't trade above, right? It was a high of 130.74 here, and then the next candlestick, well, again, was the high of 130.74. And you can see that because it didn't pass and it ended up going down instead, that's when you would sell. So, yeah, you would have lost profit down here, but you got in way down here, and that's a nice gap up to where you can make your 20% returns in a matter of 10, 15 minutes, if that. Honestly, you could have made your 20% returns in just these two candlesticks right here. Right here, that would have been perfect. And so that's how I use price action. That's how I use key levels of contention to draw out my charts. Now, if we're looking at it vice versa, the opposite way, you can see that there is, let's do this right here, a strong level of contention formed here, right? So as we're watching this, and it breaks down. When it comes back up, we're back at that same level. And when we look at this level, we see, okay, we're in an uptrend. So now we're looking for an upper wick followed by a longer wick with a color change, which we got. So we have uptrend. We have a green candlestick with an upper wick in this level of contention. We have a longer upper wick in this level of contention, followed by the color change, right? Because it's an upper wick with a red color change because the last color was green. So now we're looking for this next candlestick to trade lower than this one because this one closed lower than 50% of the entire candlestick, or in the lower 50%. So now this one, as soon as it trades lower, we're going to buy puts. And again, once we draw out our box for the level of contention, the level of resistance on this one, and we reach that point and we see the wicks forming and we see this candlestick about to close, that's when we go over to our options. Whoops, did not mean to do that. That's when we go to our options and we buy or pull up our put chart, order entry, I apologize. And then again, whatever it is down here, we want to be ahead of it and we want to be ready for whenever it trades lower on this candlestick right here, right? So when we hop in, we have our puts, and you can see 1, 2, 3, 4, 5 intervals of candlesticks, which is 25 minutes. We end up making some good profit off of this. And then again, it finds another level of support, has a has a lower wick, has a much longer lower wick followed with the color change, and it begins to run back up. Again, this closes obviously in the top 90% of the candlestick. So as long as it's over the 50, we're good. And then you see that this one trades higher. As soon as it trades higher, we buy in, and then it just runs up. So that is how I day trade, right? When it comes to swing trading, a lot of other factors take place, including news. So if we look at this chart right here, this was Friday, this was yesterday. I'm kind of disappointed because I recorded myself trading. You can hear myself saying, all right, I need to buy puts. This thing's going to be going down today. And I did not buy puts. Instead, what I did was I found a level of contention here in pre-market. And I decided, okay, this was puts, yeah, but now it's finding a level of support. Now, what did I do wrong? Firstly, there was no lower wick on this color change. Secondly, this is at 50%. This is not within the top 50%. This is at 50%, if not below. So if I'm looking at this, this should have never been an indicator to get in. And then on top of that, this candlestick never traded higher. So I should have known not to enter this trade. But the problem was I saw this long upper wick and I saw this smaller candlestick as opposed to this one. I got antsy. I thought, okay, AMD always reverses in the morning. It goes for about 10, 15 minutes. Then it has a strong reversal to the opposite direction. And with that opposite direction, if we can get in early, we can get this early contract at a very cheap price. And because it's Friday and we're playing the weekly options on it, and it's very risky, don't do that. But because it's the weekly option, we can probably get 70 to 100% just in about 5 to 10 minutes. And so it was a betting game at that point. So this is why you need to actually stick to the rules. Right here, you can see this was a good trade as well. This one was a good support range or a level of support. You can see that it was a red candlestick, it had a lower wick. We had another lower wick bouncing off the same area, but it closed into a solid green candlestick, which was above that 50% mark. You see the next candlestick trades even higher. You could have bought in. Only problem was that it got rejected at around the same level up here. And so ultimately, I don't know what the news was, but AMD ended up dropping 10% on Friday. But anyways, that's just a short little lesson, I guess you could say, on how I trade. I just know a lot of people were asking, hey, Rich, how do you day trade? How do you swing trade? How do you do this and that? And quite frankly, I day trade just using this simple system. It's not a strategy. It's more complex. It's a system, right? It's simple. Not always easy, especially if you're a very emotionful person. You just trade the price action and you draw out your key levels of support and resistance, or your levels of contention is what I like to call them. And so that's the video. If you guys like the video, go ahead and leave me a thumbs up. Subscribe if you haven't already, because I'm going to be posting pretty much every day unless I have something come up, which sometimes I do, work-related stuff. And then if you guys don't mind, go ahead and leave a comment down below. I want to know what kind of videos you guys would like to see. Do you need more tutorial videos, more how-tos, more challenge videos? Because I am going to be starting another portfolio challenge. It's going to be a $1,000 portfolio challenge. The last time we did a $1,000 portfolio challenge, we took it from $1,000 up to $132,000 in approximately 4 weeks. So we're going to do another one. This one's going to be a lot more conservative just because of the economy that we're in and the White House administration that we have. It's kind of risky. As you can see, the SPY plummeted today just because Russia's getting ready to go to war with Ukraine, and I know our administration is going to be involved in that somehow. They already made some comments about it. So just tune in, subscribe to the channel, turn on your notifications by hitting the notification bell, and I will see you guys on the next video. Thank you guys. Have a good day.